Hi everyone, welcome to Thursday. And every Thursday we take a look at a share and do a share and review. Today's no exception. We're going to take a look at Rocket Lab. However, just remember this is not intended to be personalised advice. It is for educational purposes only. Before I do jump across and share my screen, we're in June at the moment, and you have until the 30th of June to make sure you've made 1,043 contribution to your KiwiSaver. This is really important for people who perhaps are maybe taking a break from the workforce, or they haven't contributed that amount of money into their KiwiSaver this year. If you contribute 1,043 before the end of June, then you will receive the government's contribution of $260. Whilst it doesn't sound a lot, you'll be surprised how this does add up over time. In fact, I might even do a video for you if you're interested to see that. If you want to have a chat about your KiwiSaver, if you're not sure about it, by all means, reach out. I'm happy to help. Also, I'm going to put the link to Koru Wealth in here. They are able to give you financial advice. They're able to make sure that you are in the right fund and help you along the way if you need some help and if you're unsure. So do reach out to them. Right, let's go take a look at Rocket Lab. Rocket Lab is a New Zealand company. However, it's listed on the NASDAQ. I wanted to take a look at Rocket Lab simply because there has been a lot of conversations coming up lately in different share groups that I follow. And of course, like always, people are trying to pick tops and bottoms, which can be really difficult to do. So I've got Rocket Lab up here on the screen, and let's zoom in. So last week, you can see they had a really big sell-off. Now, I'm not into the whys, wherefores, that sort of thing. I purely look at the charts. Up until then, Rocket Lab had been having a phenomenal run. And in fact, let's go and put our moving averages on and just take a look. So we'll use the 30 exponential. And we will also put on the 15. Going back for the last 5 years, actually, if I just hover here, Rocket Lab 5 years ago was worth about $10.14. You can see now that it's worth about 110. In fact, it reached a high of basically $141. That's an absolutely phenomenal run, and good on you if you have owned Rocket Lab. And looking at these moving averages, whilst we had a big sell-off last week, those moving averages haven't crossed. So I'm not saying that Rocket Lab is necessarily going to continue to run strongly, nor am I saying that it's going to fall. However, if you're looking at the charts like I do, Rocket Lab could just be taking a little bit of a pause. And you do see that. And in fact, if I go back to October last year, you can see that we reached a high there, or it closed that day of about $64. And then we had 6 weeks in a row where Rocket Lab fell, and then it rallied again. Okay, then we had another 4 weeks in a row where it fell. It went through a bit of a sideways patch, and then it had this huge run. The thing to note, though, when you look at the moving averages, even though it fell and it fell below those moving averages, not at any stage did those moving averages cross to the downside. Yes, they've got a little bit of a curve on them at the moment, but you can see that also around through this period, October last year, where it had a little bit of a curve, the market fell, but it didn't cross. They clearly stayed with the 15-week above the 30. That's why looking at the 5-yearly chart and on a weekly basis, it's not giving me too much concern. But let's go and have a look at the 1 year and see what that's telling us. Now that potentially is painting quite a different picture. You can see that we've had this strong upward run. Yes, those moving averages have started to arc again. They haven't crossed through, although last Friday, Rocket Lab closed at that 30-day low. Like I just said, it's not necessarily anything to be alarmed about or quickly get out. However, just be cautious. Now, this is why I use stop losses. So let's go back to the 5-year chart. I've just taken those moving averages off, and I'm going back up to my indicators, and I'm going to use the stop loss We go ATR trailing stop loss. I always use a 21 period. Now for a share like Rocket Lab, I'd be happy to leave it at 3 points, but on the New Zealand market, I do 4. So let's make it 4 just to be consistent. I'm going to take out those buy stops. I'm just going to make the sell stops a little bit more prominent. The sell stops, if you are using the ATR, it's telling you where you should be putting your stop losses. Now, if I zoom in and I'll just go back. So if you can see through here, which was around the middle of 2024, the share, if I just look here, had a close of about $5.37. And this blue underneath is this trailing stop loss. It had a little bit of a jump up. It went from about $3.92 up to about $4.01. Then if I just go across a bit further, you can see we've had another step up. It went to $6.26. A few more step ups and it had your stop loss, sorry, $19.93 thereabouts. Yes, you would have been stopped out even here, which was the 20 week beginning the 24th of February last year. And then it went obviously below that. Now, if you jumped back in again, you can see, so from where you would have been hit out, which would have been the end of February 25, but if you didn't get back in again until this candle here and the share was trading at that point of about $30, you could see here, here's your stop loss, okay? So again, as I move along, you can see that the stop loss is still in place, and that's that dashed line underneath. Now, even though last week was quite a big sell-off for Rocket Lab, here's where your stop loss is positioned. So that's positioned at the moment at about $89. Now, what I would be doing if this was me, I would be leaving my stop loss at that position. So then if Rocket Lab continues to fall, that's where I'll be taken out of the market. And hey, if I bought it back when it was in the 20s, that is still an absolutely phenomenal profit. With a stop loss, you will never ever be taken out at the top of a market, and that's not the idea. The idea with a stop loss is to help you ride a share up, like in the case of Rocket Lab. However, it is also designed to protect you when the market starts to fall or the share potentially starts to fall. And by leaving it at that 88, 89 mark, if Rocket Lab does continue to fall, that's where you'll naturally be taken out of the market and you'll still be making a really healthy profit. If it continues to run and it goes on to reach all-time highs again and make all-time highs, then naturally you keep shifting your stop loss up in order to capture that. The beauty of a stop loss is not about picking the tops of the market and timing a market. It's about keeping you in on these big rolling trends. So Rocket Lab has been, as you can see, absolutely phenomenal. Let's take that trailing stop loss off. Now it's trading on the NASDAQ. Let's make a comparison to the NASDAQ. Here we are here. Look at this. So the NASDAQ over the last 5 years has made nearly 61% profit. Rocket Lab, even though we had that big sell-off last week, you are looking at a 609% profit. It's absolutely phenomenal. Good on you if you own Rocket Lab. You have obviously had an absolutely stellar run, which is great. Now, I believe it's all about protecting your capital, putting a stop loss in place so it takes away that emotion. And like I said before, if Rocket Lab does fall further, you will naturally be taken out of the market. If it continues to run, great, keep running on that upside. I really hope that's helped. Like I said, Rocket Lab has been an absolute star performer, and if you had owned it, congratulations. And I hope this has helped. I want to help you with your share trading journey, and in fact, anything in the educational realm regarding finances. So if you're unsure about anything, do reach out. I'm happy to help you with any questions you may have. So until next week, take care.